You've probably heard about the importance of an emergency savings fund, but sometimes it can be difficult to know where to start. The first question you're probably asking is, how much should you save? Experts recommend a minimum of $500, which is enough to cover minor auto repairs or unexpected costs. If you're carrying a lot of debt, $500 is a good starting place. Once you've reached that goal, turn to paying down your debt as quickly as possible. When that's gone, you can focus on saving more. Saving 3 to 6 months worth of expenses would help protect you against major life events like a job loss or medical need. With a goal in mind, it's time to start saving. The easiest way to do this is to make it automatic. You can schedule automatic transfers that move money from your checking account to your savings. Or if your employer uses direct deposit, it may be possible to split your paycheck into 2 accounts. If you have irregular income or are living paycheck to paycheck, you might feel like this isn't an option. Consider using an app that rounds up any purchases you make to the nearest dollar and deposits the difference. Even a little bit can add up over time. You can also take advantage of one-time payments to stash something away. If you're expecting a tax return, commit to depositing at least a part of it into your emergency fund. Once your savings habit is set, you'll want to reevaluate on a regular basis to see if your technique is working or if you need to adjust to meet your goal. While saving money can sometimes be difficult, even a small amount could be enough to cover an unexpected expense and help keep you debt-free.